What's up, you guys? All right, well, there it is, $8,730 to finish up the week. This has been an awesome week. I'm trying not to get too excited about it because, obviously with trading, easy come, easy go. It's great to have green days, but you don't want to get so ecstatic over them that you get sloppy and complacent, and then that, of course, can lead to red days. After red days, you don't want to get so frazzled that you start getting impulsive or desperate, because then that makes it worse. So, it's trying as much as possible to almost detach from, it's almost detached from how much you make or lose each day, in the sense that each day you come in kind of fresh. Now, I say that on the one hand, and of course on the other hand, like we kind of talk about sometimes with, race car driving and doing laps, you need to know if today's a day where you're setting your best laps, because it tells you that, the car's tuned right, the track is great, and today's the day to go for that record. Obviously, if you're having a great day trading, you need to be aware of it at that moment, so you can kind of try to lean into it and make it, potentially one of your best days of the year. You don't want a day that could have been your best day of the year to be the day that you're like, oh, okay, I'm gonna stop trading at 9:45, I've hit my daily goal. So it's like you have to be in touch with the market and how you're doing, but then at the same time, be able to detach from it, so when you come in the next day, or if you're having a red day, you don't let that P&L allow you, I suppose, really to trade emotionally. I guess that's really the thing, is to detach the emotions that are tied with losing money and that disappointment, or making money and that excitement. When you allow those emotions to sort of flood over into your trading decision, that's when you can really get into some trouble. And I say it from experience. So during this recap, you're gonna watch me experience some pretty serious FOMO on a stock as it double tops, it breaks through 8 and rips almost all the way up to $12 without me. It goes through 1, 2 circuit breaker halts, and then a third one coming back down. And we played out, we recorded through the whole thing, and in between the halts, I talked a little bit about my kind of struggles with a few of the trades that I took last year that were in circuit breaker halts, and the challenge of these two styles of trading, one of holding the whole thing for the big move, and the other of taking profit as you go. So I'd love for you guys to comment below which you think makes more sense, taking profit as you go or holding the whole thing for the big move. Because this week, stocks like MYO, BNTC today, those are stocks where if you held the whole thing for the big move, man, you could have really killed it. But it feels like those are few and far between. It feels like whenever I try to hold the whole thing for the big move, I end up getting stopped out break even, or even for a loss. And in fact, the 3 stocks that I traded today, when I traded them, if I had not taken profit as I went, I wouldn't have made $8,000. But what do you guys think? Leave comments below. I'll see you guys first thing on Monday morning. And this weekend, you're gonna see a couple new episodes coming up on YouTube. One will be 2019 year in review, and the second will be the month of January, a roller coaster month in review. So I hope you guys enjoy those, and I'll see you on Monday morning. All right, everyone, so we're gonna do our midday market recap. We're gonna go over the trades from this morning. A couple of good trades. I traded 3 stocks, green on 3 names, and up $8,730. So I am now green every day this week. So 5 green days in a row here, plus 3 green days from last week. So that's 8 green days in a row. And I'm up, I guess at this point, about 48,000 on the month, which is a fantastic start to the month. I really can't ask for much more than that. I know I came in this morning with a daily goal of $1,000. I wasn't looking to make a lot. I was perfectly content to have a small green day to finish what is, what had been a terrific week up until today. But YTEN ended up being the stock right out of the gates that gave me a solid trade, and ended up just like that, putting me well above the daily goal and up close to 50,000 on the month. So that's terrific. And I guess my hot streak that has sort of started towards the end of last week. Let me see where I didn't look closely at how much I made last week. But let me take a look here just out of curiosity on my calendar. Let's see on my my trading records. So I guess I made about, let's see, that was 10, so about $14,000 in the last 3 days of last week. So I guess that puts me up $48, $58, $62,000 in 8 days. So I'm tempted to write that down because that's 62,000 in 8 days. That's pretty sweet. But I want to not try to hold too much of a measuring stick there and get myself fixated on trying to, I don't know, hit 100 grand in 10 days, or, sometimes when I start to, I always sort of do that, and that can throw me off my center. So in any case, doesn't really matter all that much other than it's been a great week. It's been a great start to February, and let's look at YTEN. So this stock actually took off yesterday. It started to open up yesterday around, 3 in the afternoon, and it was kind of a surprise stock. It just all of a sudden started to take off. And so this is the, there was a filing out, was this one yesterday? Let's see. I'm not sure if this one was the one from yesterday or if this is the one from this morning, but there was an SEC filing out yesterday, and then I guess another one today of, well, if you purchase more than, I think is it 10%? If you purchase more than 10% of the outstanding shares, you have to disclose that. And so that gets disclosed in these SEC filings because you're taking a stake in the company. So there were two of those, one yesterday, one today. And then this morning we had this headline here that brokerages set $19 price target for Y10. Now, sometimes when this happens, I feel like it's setting us up for a secondary offering, and I can sometimes be a little suspicious. But on the other hand, we will sometimes see stocks like this really open up. And YTEN is a stock that has a history of making some big moves. You can see back here some of these candles where it just shot up. So because of that, I generally was feeling pretty bullish on the stock. I didn't trade it yesterday. Of course, afternoon trading, I've told myself not to do. But pre-market, you can see it was squeezing up here, coming up, coming up, coming up. And we had a pre-market high of just under $14. So right into the open, this is what we were looking at. All right, so this is our 5-minute chart. So what I ended up doing was drawing resistance lines, and this is all based on Chapter 4 of the Warrior Pro course, the day trading course that I teach. And so I knew we had some resistance at around 14, 1480, 1560, 16. Then we had room to 1906, 1960, and then room up to 23. I knew that the 200 moving average was at 2236, so that was going to be a potential resistance point. But otherwise, we had, some nice little kind of pockets of opportunity. So as soon as the bell rings, I'm watching this, and it opens and it dips down to 13, and I stepped up to the plate and I bought the dip. So let me show you this live recording here of the first 10 minutes of the day, first only 5 minutes of the day. All right, so we're watching YTEN. I'm going to fast forward to the open. All right, so you can see right here, we've got about 30 seconds to the bell. All right, so I've typed in my order entry window. Thank goodness I tabbed over to the IRA, because if I hadn't, I would have missed the entire trade. This was a very quick trade. Our pre-market chart is showing the high at $13.99, little pullback here. It's up 29% on 1 million shares of volume. Okay, so I'm gonna play this. That's 58, 59. The bell has just rung. Kind of a funny open, because it didn't really get, like, all of a sudden, I don't know. Seemed like a little bit of a staggered open, but it could be, that could be just my computer or something, I don't know. So anyways, we get the open. I'm seeing it dip down. And right there, I jumped in. So what I did on this was a little aggressive, and I bought the dip. I was pretty confident. Right here when I saw this red, this is where I was wanting to get filled at 29. So I'm clicking the buy button here and I'm filling at 37, 44, and 47, and then adding right there. So I guess actually for a second I was down a little bit more than I realized. However, I had a pretty high level of conviction that this dip would get bought up. Being as green as I am on the week, I was willing to take the risk on this trade, being that it was the leading gapper, the one that looked the best. And so I'm in here, moment of truth. Needs to break 75. If it breaks 75, that psychological resistance, as soon as it breaks there, there's a great chance it's going to break 14. Boom. I put an order on the ask. Or I might have even been hitting the bid there. So I'm taking some shares out, and just like that, look at that profit stack up. $6,325. So let's back that up for 1 second, because it was a little moment of truth. I got in thinking right there it was going to surge up. So it was anticipating a red to green move and a breakthrough 14. We got the breakthrough 14. From there, I was down to 600 shares, willing to hold through this pullback and consider adding back. If it breaks over 1450, that was my next psychological spot that I wanted to add for that move up towards 16. Watching. Right there, that's looking good. 1460. And then all of a sudden, it breaks 14 and it flushes down. Quick drop to 83. People panic out, then drop to 60, drop to 50. So I'm still holding my 600 shares. I'm like, all right, well, it's not surprising that it's got some volatility here. In a lot of ways, buying dip pullbacks like this is one of the lowest risk setups because you're buying so close to support. Now, the stop had to be below 13. No doubt about it. Had to stop at 13 if it broke that level. It flashed there for a second, and I was like, oh, this might have been, I might be wrong on this one. But buying the dip there, in this case, my downside was about 40 cents per share, and my upside, well, was over $1.40 per share. So about 3-to-1 risk versus reward. Again, you could have taken this trade with 80 shares, or 800, or 8,000, or 10,000. I mean, you share size based on your risk tolerance. But I really like it when I get the opportunity to buy a dip like that, because almost always we get that quick red to green move, and that just creates this instant 50 cent, anywhere from 50 cents to $1 breakout. I won't do that setup unless the stock has at least 50 cents of profit potential, because when I do buy a dip, there's obviously some downside risk there, because you're kind of buying slightly against the trend but expecting it to reverse. So it was maybe a little bit of a aggressive. I think the only thing on this that was really aggressive for me was my share size, maybe more so than usual. But I think today, given the momentum we've been seeing, it was the right. It's the right time of it's just one of the things we talk about. When is it the time to put the pedal to the metal, and when is it the time to ease off the throttle? Given the fact that I've had, now I had 7 green days in a row coming into today. The market was hot. Which was our leading gapper? Well, we had a couple, but these were lower, price, and the floats were higher. So YTEN, this was the one that I think a lot of people were really looking at. This was, I think, the most obvious gapper. So when the most obvious gapper fits within my strategy and is moving and showing potential, that's the time I'm going to step up to the plate. Now, after YTEN ended up coming back down and not holding up super well, I was a little cautious. BNTC, this stock hits our high day momentum scanner down, where was it? Like down here. And you can see it's up at 750 right now. It's been kind of a wild ride. I'm just going to put this up here, BNTC. 768 looks like it's going to halt, going back up. So this one, it had this first pullback right here. I didn't trade that. It pops up to 680. I didn't trade that either because I pulled it up and I was like, well, I don't see news on it. I see that it's a recent reverse split, and reverse splits have been working fairly well for us, but this one doesn't have news. I'm not sure. I'm hesitating. So I hesitated for a little while. It consolidates sideways. It holds up. The spreads start to tighten. It's up 20% on 172 times relative volume. And so as it came right up here to break over 75, I was like, you know what? I'm going to give it a try. So I jumped in as it broke over 75. It rips up to 713 and gets halted. It's then halted for 5 minutes. Coming out of the halt, I added at 744 and 750. So right in this area, I actually doubled my share size right here. It squeezes up to 794. I take some profit in the 780s. I don't know if I got any filled in the 90s. Let me look. No, 788 was my highest exit. But that was okay. So I got some profit there, and then it flushed down, and I ended up selling the rest of it for a loss. So I was net positive on it by 2,800, but it didn't hold up very well. It halted coming back down. But then now here, all of a sudden, it's squeezing back up. This is a classic double top setup. So what you have here is this cup shape. So the cup holds the water. But the problem is, although you can buy a break of the high, and in this case, it would probably squeeze out some short sellers, so it probably will work. Usually what we like to see to reestablish lower risk is a little bit of a pullback, which forms the handle. Off of that handle, that's where we're buying. And sometimes that occurs right through here, just underneath high a day. And then what you end up doing is you're basically buying a flat top breakout. Sometimes it occurs a little below or a little above. This will probably occur a little bit above. But remember that back of mind resistance level is up here at $9, which is the 200. So, this didn't end up being a particularly impressive trade. And then, oops, what's going on here? And then my last trade was a KER, which also hit the momentum scanners up. Let's see, when it hit the scanners, it was up about 10% on, I think, 20 times relative volume. So right here, a KER. So I pulled it up. Again, I saw that this is a somewhat recent reverse split, and it has gap fill on the daily chart from 385 all the way up to 555, almost 6. So that's basically a window with no resistance, which is what we like to see. So I jumped into it for the break of 4. It hit a high of 410, came back down, and I stopped out just shy of break even, up $55. And with that, I said, you know what? I feel like the writing's on the wall. YTEN has failed. BNTC at the time, BNTC at the time seemed like it was failing. That was before it came back up here. And AKER failed. So I said, you know what? The writing is on the wall. I'm going to call it a day with $8,700 of profit and not push my luck. Now, of course, I'm feeling a little bit of FOMO because, you can see, obviously, BNTC is surged back up. I didn't take the trade on the way back up, and I'm obviously gonna miss that opportunity there. So that FOMO will have me thinking, maybe I should buy a little bit of a breakout up here. So let's watch this. What I might do, kind of on resumption, is maybe do 100 shares just for the heck of it. So have a little trade as a demonstration. So let's see. So the halt time was at so this was the halt time. It was actually 10:22 and 33 seconds. That was the last print. 10:22 and 33 seconds. So the resumption should be 10:27 and 33 seconds, exactly 5 minutes later, unless it's a 10-minute halt. Now, if it's a 10-minute halt, usually that means it's going to open quite a bit higher, which is great if you're in it, but it can make it a little bit hard to add. So, I honestly think that the best quality on this would be you know, it gaps up maybe to 825, squeezes up to 850, does a little micro pullback, and then establishes a lower risk entry for a trade from, you know, 835 up towards 9. But just remember, you've got that resistance at 9. So let's see, we've got resumption here coming up in just a few seconds. I'll just move this down here for now. So this is our level 2 in our time and sales window. So is it going to be a 5-minute long halt? I see 840 on the bid. That would be a 40-cent gap. So it's still halted, but give it a second because the last one was halted for a few seconds longer than 5 minutes. All right, so it looks like you guys have a 10-minute long halt. So for those of you guys that are in this, I'm expecting that this is going to open on the higher side. I see 888 on the bid, but it flashes around a little bit as it gets closer to the open. Sometimes those will sort of dial in and be a little closer to what it actually is, but other times they're totally inaccurate. You know, you'll see 788 and then it opens at like $11, and you're like, I didn't even see that coming. So it does sometimes surprise. All right, so it looks like we're gonna run this recap here for another, well, 4 minutes now at least. As I look at this on the 1 minute chart, the 5 minute, I wouldn't have been a buyer down here for the first 5 minute candle to make a new high because it was below the VWAP. Last month, a lot of the trades I took where I entered stocks below VWAP ended up being some of my biggest losers. So I want to be careful about doing that this month. Now, this right here, now that's a little bit better. Okay, it's again not perfect because the highest volume of the day was on these 3 red candles, which really is not what you like to see. So you got these 3 red candles of high volume. There wasn't even that much volume here as it went into the halt. And now as it's coming back up, the volume is still a little on the lighter side. So the high is 788, high of day was 794. It won't hit high of day momentum scanners until it actually hits a new high. So it needs to break over 88. I agree. Yeah, this is a shooting star candle, typically a weak candle of indecision. It's uncommon to see a stock do this. So like if I was in it going down, it would have been very unlikely for me to hold and think, oh, this has a good chance of retracing its move. It didn't really have a good chance in my opinion, but it did, which really makes it even that much stronger, I suppose, because it did something that's really quite unusual. It's not unlike what we saw in NNBC on the daily. This was very unusual on NNBC, that the stock squeezed up and then on the next day they did a secondary offering and it came all the way back down to 365. So the stock dropped like 90% or 80% overnight. And then over the next 3 days, it rallies all the way back up to 20 bucks. It dropped again. Okay. All right. Fool me once, you know, whatever. Then it does it a second time, all the way back up here. Now this is the 3rd time, so I think it's fading. All right, so what's our timestamp? So we're at 10:30, so we've still got 2 minutes and about 2 minutes to resumption. BNTC. Now, one of the things that some brokers will let you do, not all, but some brokers will let you place orders while stocks are halted. So I could place an order here, for instance, you know, to buy shares at 760. So that would be a live order, and it'll sit there. And if it opens and it dips down, it might pick up my shares, and then as it squeezes back up, I could be taking profit. And sometimes I think that, you know, that's risky to do because you don't know for sure where stocks will open. But sometimes I'll do that in kind of, you know, like aspirational, well, hey, if maybe, you know, if it dips down and flashes to 760 and then rips up to 8, you know, maybe I'll get a fill. You know, I'm not sure. It's easier for me rather than doing that just to actually watch it as it's happening. I'm usually going to be getting in a little bit higher, but I'll feel more comfortable with that. All right, so we've got about 20 seconds to resumption. 30 seconds. If we open as close, if we open at 9, then we would have to see it break through 9 and get above the VWAP or above the 200 in order to really reestablish. Look at that. Ooh, 1060. Starts to get exciting. Okay, 9. Great job, you guys. Look at that. 990. Terrific. And it's going to go into a second halt. Great job, you guys. So I'm sitting from the sidelines. I'm rooting for you guys. I mean, that's beautiful. But again, we're right. We're now officially through the 200. Let's watch this pullback. So right now, I'd be a buyer over 990. So that's the spot where I would typically be a buyer. But look at that spread. Ooh, 25 by there. So I'm going to watch 990. You see green there? Oops. I've got to update my order. 990. So we've got $9 on the bid. So what I'd be anticipating is a break over this level here. The low of this was 843. So you don't want to see it break below 843. So I'd say probably over 975 would be where I'd press the buy button, and that ripped too fast, so I'm not going to get filled there. There's 1008, there's 1040. So you can see how that pullback there, terrific. Nice, Jess, good work. So now we're up 100%. So, this may end up giving us some more opportunities. The struggle for me is, and when I see stocks like this, I ask myself, should I have stepped up and taken the trade? I said I was done on the day, but then, this all of a sudden popped up. Should I have gone for it? It's something that I really struggle with, because if I had gone for it and I had lost, I would have felt like, I already shut it down, and then I came back, took another trade, and look at me now. I'm up only 6,000 on the day. Look at how fast that just dropped on that candle, right? All of a sudden to 957. What if I had just added at 11, thinking it was going to go into a halt with 2,000 shares? I'd be down $3,000. So anytime you're starting to think about trading from the perspective of, oh man, I missed that, that's fear of missing out. And you've got to acknowledge that emotion is, excuse me, kind of, having an influence on your decision making. And that's the time to step back. So congratulations to those of you guys that nailed this trade. If I had been in it down here, which I don't think I really would have under any circumstances, because this setup was so unusual, but if I had been in it, I probably would have, tried to take this trade here with 100 shares. I could have certainly added $100 or whatever, but this is a little risky. High day volume again on a red candle. It's pretty extended. So, get what you can out of it, but remember, to be grateful when you have profit. The hardest thing about trading, one of the hardest things is knowing when to walk away, both on a green day and on a red day. So great job for those of you guys that made some money on that halt. That was a beautiful one. So high now is 98. I mean, if it breaks through 11, it looks like, this might be a spot where early short sellers, someone who might have shorted the drop here, is going to start to get squeezed out. So then you start playing the technical squeeze on short sellers, early short sellers. Resistance on the daily is right there at 1190, and then from 1190 it has room up to 1317. There's another halt. Now this wasn't as powerful of a halt in my opinion because it's on slightly lighter volume, so it might not gap up as much unless you have someone who's short some really big size who wants to cover as soon as it resumes from the halt. But it kind of, this is a little bit of a divergence here because it's going higher on lighter volume after this red candle. This can sometimes be indicative of a false breakout. So I want to be a little careful as I watch this that we don't see that false breakout. But, for you guys to be mindful of that. So up 110%. I guess I had the right idea on this earlier today. And, I made some money on it. This is one of the things with trading. You can always look at stocks and think, oh, I could have done better. Everyone could always do better, And so it's fine to acknowledge that and say, okay, I could do better. What could I have done differently on this one? Given the fact that, and I can show you my metrics when we get into, I'm going to have some of my metrics uploaded in over the weekend, but let's see, let me look at this. If I look at my afternoon trading, not even just afternoon, my after like 10:30 trading, it's been lately not too impressive. So let's see. Where's this? So this is what my afternoon trading has been. I've been doing really well between 9 and 10. Oh my God, Andrew, is that real money? Andrew's showing a screenshot of holding 9,500 shares at 737. The only thing I would say on that is, from experience, I've had times where I was holding really big size on a stock as it's squeezing up. And you know what? Selena has a great example of it. Selena had a trade. What was that trade you had, Selena? It was a TWMC. That was the one that squeezed up like $5 a share. And I think she was holding 800 shares or something. And then in one candle, it dropped like almost all the way back to break even. And, if you're, Andrew, holding that position, not to give you advice because you have to do what's right for you, but if you're holding that position, you haven't taken anything off the table. It shows your P&L on the day is 34, your P&L open is 36. So actually, well, I'm not sure what platform you're in, but in any case, it's always a good idea to take money off the table, whether it's real or sim. Even if you're trading in the sim, because you want to treat it just like you'll treat it when it's real money. So given the fact that I've been kind of, let's see, what time is the resumption? Resumption is going to be in about a minute. So given the fact that I have not been performing very well past 10 a.m., I've been a lot quicker in the last 8 days to just say, you know what, I'm gonna step back. I'm not gonna overstay my welcome. I'm gonna take the money off the table. Maybe I'm leaving money on the table, but I'd rather leave money on the table than give back profit. And that's what I was doing a lot when I was doing some afternoon trading the last couple months. So all of that, I would have been better off stopping at 10 a.m. And it does mean I'll miss some stocks like this. But for every one of these that I miss, there's going to be 5 others that I take and that I lose money on. So the net, and it's always about net. The net is that it was not working. So I'm excited to see resumption on this. So again, like I said, the volume going into the halt was a little on the lighter side. So the high there is 1160. Remember, if we get a halt going down, it will almost definitely. So this is where I would half consider. Let's just see what this does. I'm just putting an order in case it does a false halt going down, but no, it did a real halt going down. So a halt going down, high was 1161. And I think this right here kind of, yeah, I was thinking about buying, but it's up too high. It needs to come down. I would consider buying coming out of this next halt if it bounces off VWAP. But, you know, this right here is one of the benefits of being able to, you know, trade and be part of a community of traders. Because when you're doing all of this by yourself, you know, if you're a brand new trader, it's a lot to process. You know, should I buy here? Should I sell here? Is the stock gonna keep going? Is it, you know, is there a divergence here, or is this just still going up and it's gonna go to 15? Because it's always, you know, so easy for us to say, oh, this next stop is $20. This stock is gonna rip to 30. And so, you know, Andrew, obviously, let's hope that whether you're sim or real money, and I didn't see him answer, but let's see, so he says he's got a, well, let me scroll up here. So he's got to stop at 10, but of course, if you stop going down, you get slippage, and if it's a halt, then you might not get filled. So like right now, you said your stop is at 10:07, but there's a good chance that this will open lower than that. So if it opens down here, let's say at like, you know, 960, he'll still be a winner because he's in it. He's in with a good price, but he's in from 737. But obviously, you want to try to keep as much of it as you can. It's two different strategies of trading, though, because the one strategy of trading is I'm going to hold my full position. Oh, he got out with 24,000. Okay, great. So the one strategy is I'm going to hold the whole position, and I'm not going to sell until like the first, you know, red candle on the 5-minute or something like that. You know, you use like sort of bigger stops. You will have some trades, like perhaps this one, or perhaps MYO on the day that it squeezed up here from 8 all the way up to 32. You will have some days where that's going to really pay off for you. But those are going to be fewer and further between, because on a day like today, the first trade that I took on BNTC where I made 2,800, you wouldn't have made money on it because you didn't take your profit off the table. YTEN, if you were holding that for a rip up to 16, 17, you wouldn't have made money on it. It came back down just as fast. And AKER, you would have lost on. So you'd be red on the 3 names I'm green on. I'm focusing right now on base hits. Now, granted, base hits with 8,000 shares can be a lot of money, but I'm still focusing on taking that profit pretty much as soon as I have it. So the net result of that strategy, and we can go up here to, let's see, let's go back to, you know, just long stretch of time here. The net result is that my accuracy is really high because I take profit pretty much as soon as I have it. So as long as I'm right about a stock going up at least 5 or 10% from my entry, I'm usually going to take some profit and I'll lock up that trade as a winner. My accuracy, therefore, is high. It's not hard to predict when a stock is going to break out, you know, by 20 or 30 cents or 5 or 10%. Predicting the MYO, BNTC major breakouts, those ones are harder. Unfortunately, though, the result of my approach is that my average winners are also a little smaller because I take the profit before they become a home run. So even though occasionally I'll get a home run, I feel like the times that I get into a trade, and I know Mike would agree with me on this because he and I were talking about it with Tesla earlier this week. The times that I get in and I say, I'm holding the whole thing for 50, I'm not selling anything. I swear every time I do that, I end up getting stopped out break even or even for a loss. And it's so frustrating. So that's just what, I just keep saying, why, Ross, why were you swinging for home runs? Take the profit as you have it. Now, of course, trade the market you're in. If you're in a hot market, that may be a time to let them ride a little bit more. But BNTC, this was a surprise to me. That is an unusual pattern. I mean, we don't really cover this pattern in the classes because it's so unusual. This is a clear double top, and typically they fail at the double top. This one blew through the double top and squeezed up from 8 to 12 almost. One of the hardest things, no doubt, is to sit on the sidelines and watch and not trade them. It can be too tempting. And so typically what I would do with something like this is I would shut off my monitor and I would walk away, because if I just sit here and stare at it, I'll convince myself to take trades. And that's, I think that's only human. And I think that part of being a successful trader is learning to kind of put in restraint systems to prevent you from doing what is only natural, to try to bounce back after a big red trade by being overly aggressive. So having that max loss, having the rules that if this happens, I walk away, and actually following them. So this is going to be a 10-minute halt going down, which means most likely it's going to be a decent sized gap going down. I had a trade in Italy that I took. This is a great example. I was in Italy. Let me go back. Let's see. So when was this? Overview. Let's go overview 2019. So Italy was June of last year, and was it this day? I think it might have been this one. Let's see. Let me look at the details of this. So, that sucks. Yeah, it looks like I bought it, stopped out, and then it ripped. But no, that's not the one I was thinking of. There was another one that I had. I don't remember which one, what day it was. But in any case, there was another one that I took that I jumped into, and I was up over $10,000. I was up, I think, close to 12 grand. And I didn't take any of the profit because I was getting greedy. And I was thinking, this is going to be my home run. This is going to be my, biggest trade of the year. I'm going to set a record here. And I didn't get out as it was squeezing up. It then halted going down, and I was still holding full size. I was holding full size into a halt going down. I hadn't taken any off the table. And I ended up going from up 10,000 to down $10,000 on that trade. And I was like, that's what you get. What happens? I'll tell you guys a joke. What happens when you cross a greedy trader with a choppy market? You get what you fucking deserve, which is, for me, a massive loss. So, you live and learn, and at least I lived. It took me, though, a while to bounce back from that. I mean, I've got my 2019 year in review coming up for you guys. I'm going to upload it tonight, actually. And one of the things that you'll see is that 2019 for me was choppy. Up and then down, up and then down, up and then down, up and then down. And could have done without that. So I'm trying to smooth it out a little bit this year. It's still a struggle. So let's see, when's resumption gonna be on this? So we've got about 30 seconds to resumption. So let's watch this. It's showing 934 on the bid, 910. Big spread. I don't like to panic out. I give them a chance to bounce because sometimes they will bounce. Over 10, the spread's too big to take a trade here. The low is 910. And at this point, it's just kind of coming back down. I will say that on the 5-minute, the volume profile is okay because you have green volume as it squeezed up, light volume on the pullback. But on the 1 minute, you have highest volume on a red candle. And that's not ideal. So, you don't want to see you don't want to see a break there. So good job for those of you guys that squeezed a little bit of profit out of this unpredictable move. And, we'll go into the weekend feeling good. Even though I missed it, I have, the constant faith that there's always another one around the corner because that's the way it has always been. So, live and learn. This was an unusual setup, but it ended up working. So maybe next time I see it, I'll take a stab at it with smaller share size. But I still want to focus on trading within the time of day that I trade the best, which is between, of course, 9:30 and 10 a.m. Between 10 and 10:30, especially on a Friday, I don't know, it feels like a little risky, but today was Wild Card Friday. All right, so that's it for me. I hope you guys have a great weekend, and I will see you back here first thing on Monday morning. See you guys on Monday. Hey, did you know that I go live every single morning between 9 and 9:15 to stream my pre-market watch list? Subscribe to the channel, press the bell for the alert, and you'll get the notification.